Hi, I'm Warren Buffett. Welcome to What Are Your Thoughts? I'm here with Michael Batnick. What? Why are you shaking your head already? We didn't even start yet. And Ben Carlson, our special guest. And I don't know what Michael's going to ask me. He doesn't know what I'm going to ask him. We love this game. Play along with us. Here we go. Okay, first of all, Ben, welcome to the compound. Thanks for playing. What's going on? Everything good?
Yes, I have a gut bomb from pizza and bagels, but I'm ready to go.
You spent the night on Long Island?
Yes, I feel like a New Yorker.
We do pizza and we do bagels.
I rode the
we
subway. I'm basically a New Yorker at this point.
No, Long Island Railroad.
Wait, why is there a phone ringing? All right. Hey, so let's start with this. You posted about the Investment Company Institute's annual yearbook. You had a lot of great charts about the mutual fund industry. And one of the things it seemed that you were surprised by was there were 118,000 mutual funds in existence managing $47 trillion.
Wait a minute.
It's a huge number, but what did you think it was going to be?
I guess that includes all share classes, but like the choices these days are, that's more stocks than there are in the world.
Wait,
right?
So the 118,000 includes like Fidelity, Magellan, A shares, B shares, C shares.
That would be my guess. I could be wrong.
No, 100%.
It's worldwide, and it's worldwide assets or worldwide in the fund, and that's just in the fund space. That's not even like total assets being managed. So,
right, because every country has its own mutual funds. So
yes.
If you're thinking world, so that's not like it's not like a regular investor has to choose between 118,000 funds. You know, like it might exist. But if you just do U.S. only, maybe it's under 100,000.
I think there's like one mutual fund for every 37 investors.
But if you're a fund company like even Vanguard and Schwab, you have hundreds at least to choose from. It's still not easy.
So do we agree though that most people's investments are confined to a 401k for the most part?
That for most people, I'd say that makes
right.
sense.
And so in a 401k, you don't have a choice of 118,000 funds.
But hold on.
Maybe you have 30.
So there's a lot of share classes,
Right.
and then there's a ton of overlap. So how many S&P 500 index funds are there? 450. Right. So I'm not saying there's not a ridiculous amount of
How many S&P 500 index funds should there be in the United States? 10? 5?
Well, every major company is going to have one.
2.
So.
There should be 2.
There should be 2, right?
Yeah.
What
do you mean should be 2?
Well, why do we need a third? What is it doing that the other ones aren't doing?
Why do you need a second?
Competition. Fee competition.
Competition.
Voting.
So that if there was only one, they couldn't say this is now 50 basis points.
All right. Anyway, this is dumb.
All right. Anyway, I thought it was a big number, but I wasn't blown away.
Speaking of dumb,
yeah,
a $91 million steel rabbit.
You're talking about the Jeff Koons sculpture. You know who bought it?
Well, it just came out yesterday.
Stevie Cohen. He has one of those balloon dogs on his front lawn. By the way, so I went to the. Listen, it's art, so you're never going to get consensus on what something should be worth. I went to the Whitney when they did the Jeff Koons show, and they brought all of his stuff into the building and even put some stuff outside in the courtyard. I love his art. I don't know if something's worth $91 million.
I honestly wouldn't have paid $1 over $89 million. That's just me.
So it's a record for a work of art by a living artist. I guess that's maybe notable. I don't know. Should we plot that against the S&P?
Art goes in quotes on this, I feel like.
I don't particularly love the rabbit, but I love some of his stuff. I don't know. If I had $5 billion and somebody said, don't buy that because it's a new record, that would make me want to buy it. Or if I had $40 billion or 10, I don't know. So maybe there's some element to that.
But how many times has Steve Cohen paid off student loans for a whole graduating class? Like, couldn't he do that instead with his money?
I think I think he does a lot.
I'm sure
of charitable stuff also. He has the shark that's encased in formaldehyde. I think the artist is Damien Hirst.
Is that the shark that was going down the highway during the floods?
It's a real shark. It's in a tank, and it's preserved, and it's like a work of art. So that's what he's into.
Okay.
I guess there's probably worse things you could spend $91 million on. I don't know what. I wanted to ask you guys about the non-transparent ETF. So the SEC indicated that it's likely to approve. That's how that process works. Likely to approve. Presidian is the company launching the product. They're calling it Active Shares. By non-transparent ETF, basically you won't know what the holdings are. So you're betting on the active manager, and it's the first of its kind. But if it happens, all the active funds will come out with their own version.
My
question is this a step backward?
Why?
Because isn't one of the best features of the ETF the transparency and knowing what you own?
But isn't one of the negative parts about actively managed mutual funds is that you get hit with a tax bill without selling?
I think that I'm surprised the active management space hasn't gone after the ETF fund structure yet and said this is
trying for 10 years.
Totally unfair. So yeah, I feel like that seems like a no-brainer to me that they'd want to get in the ETF space and get those same.
Are they going to report their holdings on a delay?
Yeah, just like a 40 Act fund is doing they have to file a 13F 45 days after the end of the quarter, which gives them time to build a position without somebody front running them theoretically.
That's big, but how many ETF investors do you think actually look at the holdings?
None. Financial advisors.
You mean how many mutual fund?
No, I'm saying ETF people have that information now. How many have actually used it?
So Ben, in the ETF industry though, they say like advisors are the driving factor behind who buys what.
Yeah.
And advisors look. I mean, they have to. When they do proposal gen, they do X-rays. Like, I don't know. I feel like to some extent it's a step forward because you're right. That tax advantage that the ETF has makes an actively managed fund, like the hurdle is almost insurmountable. So if you get rid of that and even the playing field, and then you say, okay, now you can choose between betting on a manager or owning the index, and we're removing the capital gains distribution as one of the reasons not to go active.
Shouldn't also fees come down in ETFs? In an equivalent actively managed mutual fund just because costs are lower?
Well, on the bond side, there are some pretty big active ETFs. Like PIMCO Total Return was big. Double Line did a version of that. So on the stock side, it's like, all right, now I have a guy accumulating stocks. I don't know what he's buying, but I'm betting on the jockey. Maybe that should be less. I don't know why it would be less.
So yesterday you were on CNBC with what? Were you about to say hold on?
No, I was on with Gary Kaminsky and...
Wait, no. It was my turn.
Oh, okay.
So you were on with Gary Kaminsky, and he thinks that indexes are going to distort the market in the next downturn because...
He said it's his number one concern, which I thought was weird. That... He's saying 60% of investor capital is now in indexes.
Hold on.
I don't think it's true.
No.
Okay.
In the fund industry, it's 50-50. But people still hold stocks directly. So of total assets, he kept saying that 60 or 50 or 60% of total assets were in index funds.
That's wrong.
That's not true at all.
Yeah, we know that. That's wrong. Okay.
What is index funds as a percent of total assets?
It's probably
like
closer. Someone gave me the stat from Morningstar, and it's probably closer to a third because some of those individual stocks are held in separately managed accounts for like pensions that don't hold an index fund or ETF, but they're still technically indexed. So it's probably like 70-30 active to passive.
And then there's this
Are things too good? Like that's what we're worried about? 2.5%.
That's his big. He said that's the biggest concern. I don't understand. So his argument is that an investor that owns shares in an individual stock, like in the olden days, is going to be less likely to panic sell because they're going to say it's J&J, it's a real company.
Come on.
Now, that didn't stop people from selling the market down 23% in 1987 before there were ETFs. So I don't buy it. I understand his point, and there is something called the endowment effect, but I don't think it applies in a panic. Like the endowment effect is like if I have this microphone, what I would be willing to sell it for is a higher number than what you would be willing to buy it.
Yeah, that disappears real quickly when people are selling.
That's my point.
But also, like in the next downturn, as if we weren't just down 21%.
Yeah, we had it right. So you actually gave me the stat. Last year, investors spent the first 9 months or 10 months putting $500 billion into index funds and pulling $150 billion out of active funds.
That was from the whole year.
And then we had a bear market in the fourth quarter.
Right.
And the wheels didn't come off just because more people were in
indexes. And we had a 16% drawdown in 2016, 2017.
Yeah. I don't buy it.
2011. It's just
the next bear market. I think there's going to be more money going in index funds.
Well, that's what happens
the
after
long bear market. It's going to happen.
Totally. Giannis had a tough game 3, and a reporter we talk about like behavior, and we talk about perspective, like as it relates to investing. So Giannis had a shitty game, and then a reporter asked him if he was disappointed in himself. And I want to read you what he said. Quote, "What I have done in my life so far, put my brothers in private schools, taking care of family in Nigeria and Greece. Disappointed in a game? I'd be disappointed in myself if I was disappointed." So that's probably not what the fans want to hear, but I kind of like it.
Love
What,
it, yeah.
what do you think about that?
This guy's great.
Great.
He's
Love
so great. It like makes me like him even more that he could walk off the court and
That
say
was great. Ben and I were on the walk over here this morning. We were talking about Ben mentioned that maybe like sports takes are even worse than financial takes in terms of like recency bias and the narrative changing with every single game.
Yeah, because he's gonna win.
I don't know about that.
Oh, I'm pretty sure.
How are you pretty sure? What?
Because I think that's the wake up call that he needed. I don't know.
But he lost the next game.
I understand he lost last night, but still, I feel very confident.
I'm
Why?
51-49. Milwaukee's going to win from home court advantage.
I'm like 60-40, and I don't know anything. No one knows anything, but that's where I'm at. All right, what do you got?
Okay, Game of Thrones. I watched it. I'm pretty sure you did. Grade the final season and then the final episode. And does the final season change your grade for the show
what is this?
as a whole?
Noob whale question. That's three questions. You got one question.
That's one question under the Game of Thrones hierarchy.
Can you repeat the question?
What's the grading? A, B, C, D?
Sure.
Okay.
Wait, what?
Yeah.
A, B, C, D?
I don't know. I'm asking. It's not my idea.
Who grades on letters?
Like
Schools.
I don't know. Have you been to school before? All right. You want to do 1 through 10? I would say the final season
Schools,
is
all right.
Grades and letters.
the final season
Oh
is
yeah, elementary school.
restaurant grades like cleanliness. You ever see the signs?
All right, get on with it.
Final season 7. Final episode 5. I don't know.
Wait, there was the third question.
Yeah, then does the final season change your opinion of the overall show?
No, people need to shut the fuck up already.
That's nice. That's where I am.
It's enough already. Like that petition, 1 million people want them to remake the season. Do you have a boyfriend or a girlfriend? Like, can you find something else to do?
They live in
with your time?
Canada.
Well, is there ever a season finale where everyone's like, "That was amazing"? No, I mean maybe, but
Rarely.
Offhand, I can't think of the best shows. People have been disappointed with the final episode. So
That's like a rule.
It's like a rule. We posted this on at the Compound News Twitter account. I don't know who put it up from here, but somebody said that the Game of Thrones finale got 3 million less viewers than the MacGyver finale in 1992, which I think is interesting for like a million reasons. Are you going to cut the cord now that Game of Thrones is over?
No way. I'm going to be the last man in America to cut the cord.
Dude, how good does the trailer for Watchmen look?
Yes, that looks
what?
good. Succession is coming up in August.
What's Watchmen?
Succession is one of my favorite shows. Watchmen is like it was a hot graphic novel. They made a shitty movie about it, but now they're going to do a TV show.
It looks good.
It's very cool.
It looks good.
All right. Anyway, I wanted to ask you guys about the Slack IPO. So let me just go through this real quick. The Slack S1 came out, and they'll probably go public in the next couple of months once the S1 comes out. They're not going to do a traditional IPO. They're going to do a direct listing on the New York Stock Exchange.
Is Slack making money?
So let me get to
How
that.
could they be losing money?
Gross profit is actually exploding.
Okay.
And they're choosing to spend money. But this jumped out at me. I read the S1. They say 600,000 organizations are using it. 88,000 of those are paying. So it's like the freemium model.
Yeah.
We're paying.
Yeah.
In over 150 countries, they say collectively people are spending 50 million hours a week in active use on Slack.
Love it. It's a great product.
I'm crazy bullish.
Yes.
And I think it's replaced 50% of my email time. What do you guys think?
I'm crazy bullish on the product. I don't know like any.
Yeah, not like on the stock. Like who knows like what price it'll come out at.
This
Okay,
is the one.
I love the product.
It's the one tech stock IPO this year that I would be like, okay,
Yeah,
I would get on board with this.
It's
one.
actually a communication company.
So revenue in 2017 was $100 million. Last year it was Last year I think it went from 100 to 400 million. It quadrupled revenue in 2 years.
Wow.
So and what they said was that the enterprise customers are paying more than they were.
Okay.
So they have Fortune 500 companies where every employee is on it.
So dare I ask, 400 million in revenue? What's the valuation?
Oh, 500 billion.
No, seriously, what is it?
I don't know. I don't know. It's so.
I'm gonna 15 billion.
It's a direct listing, which is what Spotify did, which means they're not going to pay 10% to Goldman Sachs or JP Morgan to drum up demand. What happens is they just list the shares one day, and anyone that wants to buy and sell can do that. The reason why you would do that is if you just raised cash and you don't need to sell any more of the company. So they raised $1.4 billion within the last year.
Wow.
They just don't need the money.
Short the bankers.
The VC guys always say like buy the person, not the company. So if I'm bullish on
Stuart
CEOs,
Butterfield or
I would be
something?
bullish on Stuart Butterfield and Daniel Ek from Spotify. If I'm just buying the people, like those are the people I'd want to back.
I'm bullish
Yeah.
on that name.
Shout to Stuart. He's on Twitter. He's actually he engages. He's
What
good.
do you think? So this is only feels like the last few days about Twitter ads.
People are pointing out that there's more ads than ever on Twitter. They got to
Yeah.
make the quarter.
Yeah. And so two things. One, I love Instagram ads.
Yeah, you buy a pair of sneakers
I
every
buy
month.
stuff.
I
I
do
see
too.
new stuff that I never have discovered. I love it.
You don't love Twitter ads.
I don't know why the Twitter ads feel a little bit differently. But let me ask you a question. I was talking about this with Ben last night, and this is a dumb question, but I'm just going to ask it. Why does Twitter need to make more money?
Why do they need to make money?
Yes.
Because people have jobs there. I don't know. It's a public company. They have a fiduciary responsibility to their shareholders to try to make money. It's not a utility.
But why? Okay, but are they making enough money? I guess is the question.
Why do you need to make money? This is bananas. Listen, it's a public company. That's their job. That's what they're here for.
He's saying maybe they should be a public utility.
Pretty much.
They probably should.
Oh, I would love that. But who's in charge of it then? Put the community in charge. Watch.
President
within
Trump,
6
obviously.
months, Russia will run it. I feel like the ads are not as good as Instagram ads because Facebook knows you better than Twitter knows you. That's number one. And number two, Instagram's e-commerce business is like they're getting a piece of everything you buy. Twitter is running a display ad for a user.
If Twitter did ads based on who you were on Twitter,
Oh, forget it.
like here, buy this pair of leather gloves to kill someone with. Like,
Yeah. Here's piano wire by the spool. Go strangle somebody.
So all right. So Twitter made $191 million in net income last quarter.
Yeah.
Oh, that's a lot of money.
Twitter can't target to the degree that Facebook can because, first of all, a ton of the accounts are either duplicates or fakes or corporate account. They don't have the.
Is it going to change the user experience? It doesn't really bother me, I guess, but it can probably get annoying quick if it doesn't slow down.
What are you gonna do? I mean, the alternative is they charge you, and then engagement will fall through the floor. I would pay. You would pay, but we're not. We're like power users.
I love the idea of 5 free tweets that won't lower the engagement. Anything above 5, you pay for.
We were at Twitter NYC. We ran it by them.
That's a Bill
They don't
Simmons
care.
idea.
They don't care. We told them to charge for TweetDeck. Everyone using TweetDeck is a power user. They would all pay. I mean,
Anyone over 1 million users should pay $500,000 a year.
No. All right. Guys, let us know what you think about these topics. Please hit us up with we love your comments. We love your feedback. Go ahead and smash that like button for us. We will be back soon. Shout to Ben. Thanks for joining us today, and we'll talk to you then.